Think that nobody ever asked, I swear I'm not chosen. The Mr. Gun.
What's good, y'all? It's your boy K Dizzy, and I'm here teaching you guys how to trade in the big 2026. I'm gonna get right to the point because it's 2026 and you still don't know how to trade, and this is the video that's gonna help you learn a strategy that will help you understand what you're looking at when you go on these charts. So as you can see right here, I'm going to talk about the websites that you need to know about. I actually have a video already. It's going to be somewhere on this video that explains the websites in detail, like a tutorial and more deeper like that. I'm just going to show you guys. The websites is in the description as well. So just go to the description to click the websites and actually access them. Like TradingView and the broker. That's really all you need, and a couple other things that I'll add in the description. I'm actually going to show you guys in this video. So this is the first website. It's called TradingView. Honestly, the only thing I look at is markets. These are all the different assets that you can look at: stocks, indices, cryptos, futures, forex, bonds, ETFs. All these things you can actually look at charts and read data. In this platform right here, like mentioned before, I have a deeper, in-depth tutorial and tour of this website, but this is how you actually look at your dashboard, your profit and loss, how to make an account, how to put in trades, how to deposit, how to withdraw, how to transfer, how to use a demo, how to make a demo account, how to do prop firms and funded. All that stuff is in the video, either in the description or on your screen. So this right here is another website that I like to share with people. As you can see in the Forex market, there's 4 different sessions: the Sydney session, the Tokyo session, London session, and New York session. And as you can see, it's closed because it's the weekend. It's Saturday right now. And you can see the time zone. You can switch. You know, I'm in New York right now, so it's my time zone. And you can also see it's 9:42 on a Saturday. So if we, oh, it's not letting us scroll right now, I guess. Yeah, but as you can see, the little rectangle, as soon as it starts right here, that's when it opens. So 3 p.m., right, is when Sydney session opens, right? And then Tokyo session opens at 7 p.m., right? And then London sessions opens at 3 a.m. And then New York sessions open at 8 a.m., as you can see, right? And so it shows you also when it closes. So like 4 p.m. it closes. For New York session, you know, this is definitely when I trade New York session. So 8 a.m. I trade, or if I don't make, you know, the New York session for some reason, I'll trade Sydney session. And so this website is really good for knowing which session or what time the session opens. And as you can see at the bottom right here, you can see the trading volume and at what time. You can also see at what time different sessions have like the higher volume and volatility, and what times have less volatility, which is more volume, more moves, more heavy impact on the moves that are displayed. And when I mean heavy impact, I mean more money. There's more money in these moves. So you want to definitely be aligned with the times that's more green. You know, other times it's slower and doesn't show as many opportunities and moves unless you force them, you know? Another website is the percentage calculator. You can find any percentage calculator, but this one is easy, and I've been using it for a long time. So all you do is, okay, say your account balance is 5K, right? As you can see, 33% of 5K is 1,650, right? So say you made like $150. Somebody might be like, oh no, only made 150. No, bro, you made 3%. Now watch if I had 10K in the account and I made 3%. That's $300. You know what I mean? Let's do 50K. 3% is $1,500. You know what I mean? So even 1,000, that's $30. You know what I mean? So using percentage to realize that 1, the banks are not doing this for you. 2, other assets aren't giving you that percentage return in one day. And 3, if your account size was different and larger, that same move that you just made will be a bigger profit. So don't look at the number, look at the process and the fact that you're able to do something like this, like print out money in a higher percentage. Okay, so that's the websites right there. Number two, 3 simple concepts that you need to know. So number 1 is market structure. Market structure, in my opinion, if you know how to like identify market structure, you can make money. You know, maybe not as efficient, but you'll at least know where the market is going and where it's structured, and you'll know how to capitalize on the same direction that it's going in. So let me give a brief example and explanation of market structure and show you guys in real time. So right here, we're on gold, right? And I already have these dots, right? And you're probably like, what is this? Let me explain. So right now, as you can see, it's going up, right? So when a market is bullish or up, going up, it's gonna make higher highs and higher lows, right? And when I mean the market structure is gonna show higher highs and higher lows. So I'm gonna show you exactly what that means. So let's say we started somewhere right here, right? This is a low point, right? We see that this is a low point in the market, right? Price traded all the way up to this new high point before, you know, trading back down. So I'm making this a high, right? And one thing that I do is get my text tool, go to add text. I already have a template, which is right here. And as you can see, I have a lot of different words that's already templated, but I'm looking for low, right? So low, and I just control drag, and that's how you duplicate. But I'm gonna go to this one and put high, make it a little bigger. This is a high point, right? So now I'm gonna look for the next. So after it made a high, it traded down to this area before going insanely up. So I'm gonna make this right here, this area, a low, right? Low, low. But it's not just a low, it's a higher low. The reason why is because it's higher than this low. This low is higher than this low. So it's a low, high, higher low, right? So I'm gonna change this to higher low. Make this a little bigger, right? And after it made a higher low, oops, it traded all the way up, not to here, but really to here before it came down, right? But we could just keep on going to more something like up here, knowing that this was like the in-between price action before it really made a real high. But this is a high. At a certain point, this was the high. At a certain point, this was the high. But then, as you can see, there's higher highs. And this, through practice, you will understand how to do market structure better and how to see it better. But as you can see, this is the high. So I'm marking this, right? I'm going to get my text tool. My mouse is like bugging out. Nah, this is crazy. Can't even drag this thing. Need a new mouse. Higher high, right? So higher high. So right now we have a low point in the market, a high point, a new low point, but it's higher than the previous low, so it's a higher low. And now we traded up to a new high, but it's higher than this high, so it's a higher high, right? Okay, it traded down here, stopped right here, so I'm gonna make this a low. But what do you think it's gonna be? Correct, it's a higher low. Right? Higher low, and the same thing continues. You wanna find the next high point, boom, right here, right? Get my tool, my highlighter tool. By the way, the highlighter tool is over here to the left hand side. As you can see, if I hover over it, it's under the 1, 2, 3, 4, 5, 6th like tool. And if you go to this little arrow right here, it's right here, highlighter, and you can favorite different tools, so they're just stuck right here. You don't have to keep going back and forth. That'll be kind of annoying. So yes, new high point right here. So I'm gonna make this a higher high. I'm gonna make this a higher high right here, right? And we continue the same trend. Higher high, right? It traded all the way down to here before making a new push up here. So I'm going to consider this a low, but it's a higher low. So boom, higher low, right? Yeah, price has been going crazy. Gold has been going crazy. I've been maximizing and taking advantage. Higher low, boom, higher high right here. So higher high, higher low, right? Higher high, higher low. And currently we're making, like, it traded higher here. So you can technically say this is a higher high and then this is a higher low, which we'll do. Higher high, higher low, right? And currently we're in, like, currently here, and on the weekly time frame that we're on, I can't see too much other structure, but if we go on a lower time frame, we could definitely identify structure better. So as you can see, to make more sense of the structure, when in a buying condition and identifying if the market is buying, you're gonna see higher highs and higher lows. So market structure, when you're identifying or sensing a buying environment, you're going to be seeing higher highs and higher lows, right? So what I want you to do is go on to any chart. Honestly, Forex pairs are easy, like AUD USD, GBP USD. Like if you go up to here and type up AUD USD, you can look at any of these, GBP USD, or just honestly go to Forex, and then just, there's so many different currency pairs, and practice market structure. You'll thank me later, but practice finding lows, then finding a high, then finding a new low that's higher than the previous low, make it a higher low, higher high, higher low, higher high, higher low, higher high. You feel what I'm saying? It's like stairs going up. So that means when it's selling, we'll see lower lows and lower highs, right? So let's edit this. Selling lower lows, lower highs, right? And that's exactly, as you can see right here, that's exactly what we're about to locate, so I can help you guys realize. So I see a little selling environment right here, this area right here, and I already see clear structure. And you have to realize I'm on the weekly, right? So this is a long time. Like every candle is 1 week worth of data, right? So look right here. Get my highlighter tool, and when you're identifying a selling environment, you want to start with a high, right? So high point right here, price traded down to here, right? So this is a low point. It's a low point. This traded up to here before then trading lower. So this is a high point, right? So I'm gonna get my text tool, come right here, get my template, get high right here, and then low, and then this is a high, but it's lower than this high, so it's a lower high. As you can see, I already have the text template, and after it made a lower high, boom, it traded down lower than this low, boom. What is it? I'll wait. You got it, lower low, okay? Lower low, traded higher, right? Made a new high, but it's higher, or it's lower than this high, so it's a lower high. So before I go on, let me put on my text, put lower low, Yes. So lower low, lower high, and I guess I duplicated it again, which it made, you know, a new low. This technically is the lowest one right here, if we really zoom in, but just this area is the low, just for educational purposes. But when you're actually studying and stuff like that, you want to zoom in or get it vertical and see which one is the lowest, and this one's the lowest right here, right? So lower low, right? Just like this. So in this environment right here, we were having selling environments, right? But overall, as you can see, gold is really more buying. But in this time frame, this time area, you've seen more selling environments, right? So you could have got moves. You could have been on, you know, on track and aligned with the environment that it was showing and took advantage of some sells. You know what I mean? And you got to think from here to all the way down here. I got my info line right here. It tells me how many days this is. This is 238 days, y'all. That's almost a year. So you might be like, oh, that's nothing. You might not have like a lot of clarity and understanding that this is almost a year worth of life, where there's a lot of opportunities to get into trades and actually understand the market structure of this area, right? So it's really important to know what direction the market is going in. And like I said, my advice for you learners is to go onto a chart and identify market structure, lower lows, lower highs, higher lows, and really just get that in your brain, right? The next thing that you really want to learn is institutional candles. Institutional candles are candles inside of the market that the market and the market movers, the people that have more influence of the markets, aka the people with more money, they like to go to these candles and do two things: either respect or disrespect. Very simple. It's a candle that is shown over and over and over that the chart, the market likes to trade into, and then do two things. Either two things, not two things all the time, but either it's going to respect or disrespect. So respecting means when it comes to this institutional candle area, which will be marked with a rectangle, will be like an area, it's going to come into the area and then bounce right back up, or come into the area and bounce right back down. Go back the direction that it was going in. So it's kind of like a slingshot. Boom. The slingshot is like far back, aka the far back is it's in the institutional area. And then if it respects it, it's gonna, you know, you let go and it's going right back the way it was intending to go, right? If it disrespects, you can kind of guess. It goes straight through, either up or down. It goes straight through the candle, the institutional candle, and doesn't respect it. It's not a valid candle to put in an entry or get into an entry or look for entries. So I'm going to help you identify them. I'm going to find a bunch and just show you how I mark them. So right off the bat, and also on the higher time frame, you can find institutional candles easier. So for practice, go to any Forex chart or any chart. Forex definitely has more institutional candles easier shown. But yeah, go to a chart and just mark up institutional candles and really train your eye to see an institutional candle. So it's this red candle right here before the large push up. And I like how it's lower than this blue candle. Like the blue candle isn't, there's not a wick that's lower than this wick right here. Right, so it fits my description, should I say, of an institutional candle, and I mark it from the high to the low, right? And I get a gom box right here, which it's a rectangle like this, and it's in this third category. Go right here, gom box right here, favorite it, right? And these are the settings that I use. Boom. This is very valuable information. People pay for this information to understand even settings on a tool, because it shows you different data and it aligns with the strategy and everything. So it's very valuable to copy those settings and make sure your gom box looks like mine. Once again, right here. Boom. So top from bottom. All right, so this is an institutional candle, right? And as you can see, after it was made, price only went inside of it once before just taking off, right? Let's find another one. There's another institutional candle, this last red candle before the large push up, right? This is the last red candle or the last bearish candle, because everybody's chart is different. Like, it's not everybody's candles are red and blue like mine. Some people do black and white, some people do green and black, whatever. So it's the last bearish selling candle before the large push up, right? The large bullish push. And it could be the opposite. It could be the last buying candle before the large push down. And I'm going to get to that later. So this right here is one. The wick, as you can see, is not lower than this wick. So I like the format. And I've also studied, I'm 4+ years in of seeing these candles. And I've learned this candle within the first months. And I've realized, yeah, they look a certain way. And every time they look a certain way, they have a higher chance of getting respected. So yeah, the fact that this is the last red candle before the big push up, and the wicks and the candle and everything is just lower than the, the next candle, the blue candle, that's indeed an institutional candle. But as you can see, price did not come into this area. Price did not come into this area before pushing up, but it's still an institutional candle. Same with this right here. I don't have to mark it because I just marked this, but from the high to low is what I would mark. But all I'm looking at is, did price come into this area and respected or disrespected? Price didn't even come to this area. So maybe it can come back in the future, but right now nothing came into this area, this weekly area, right? But if we look to the lower end right here, if you really zoom in, there's a red candle right here. So the last red candle before the large push up. I like this. This actually started this whole push up. This was the first institutional candle before even this one or even this one. It started from here, and we could say the same thing for institutional candles lower, right? So get my gom box from here to here, boom. So after this institutional candle was made, boom, this last red candle before the large push up, right? Price came back to this area, right? It wicked in here. This red candle wicked inside of this institutional candle. And as you can see, it didn't even hit the 50% line, the 50% of this candle. It just came into this area, tested it, as they say, and then pushed up, catapulted up, not just pushed up. So this could have been a potential entry if you're already in the moment looking at like, oh shoot, it just made an institutional candle. Let me see what it's doing currently every time it comes to this area, and you could be getting in on this up push, knowing that it's respecting this area, right? And make sure you comment any questions. I also do free calls on TikTok. I also have a whole university. All that will be in the description. I teach. I have videos, pre-recorded videos and live videos of me teaching everything I'm saying and showing everything I'm saying. So make sure you go to the description or comment a question. Maybe I might answer it. So let's find another one, right? Oh, I see one right here, right? And I'm trained, like I can see it very quick because I've been doing it for a while. And that's where you want to get to. I'm not gonna lie, market structure and institutional candles. Like market structure is gonna help you understand where the market is going, right? Either up or down. Or you can, like, there's a third way the market goes, which is sideways, which is consolidation. And if you see structure is not really following the higher high, higher low, higher high, higher low, higher high, higher low, if you see that it's not following that, like for example right here, right, there's no clear structure. Like this is a high, then it trades down to here, low, but then it trades up to here, but it's not even higher than this. So this is a high. Then if it trades lower than here, now it's a higher low, like it's a low but it's higher than this. Then it trades up to here, which is not even higher than this high right here. And then you see trades lower See, like boom, 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 boom. You know, kind of like closes inwards. But this is actually called distribution. There's two different concepts that I'm not going to talk about in here, but it's called distribution and accumulation. I think accumulation is the one where there's a lot of sideways movement, consolidation, but it's really getting ready to buy up, right? So you can kind of see the structure of a accumulation, you know, and realize actually there's a picture. And yeah, so yeah, that's accumulation when it's bunched up just to buy. But this is not, this is for a long time. Once again, from this blue candle all the way to when it started to go up again, that's 126 days. So that's like 6 months, 5 months, whatever, half of 365 almost, you know, which is a full year. So that's I'd say 5, 6 months, 4 months, you know. So that's a lot of time of it being like weird and unpredictable. You know what I mean? So be careful in these areas, right? But once again, this red candle right here before this large push up, right? This really, like, after this candle was formed, it really was this whole push up right here, which is, it's on the weekly, so there's a lot of volume in these pushes. But if I mark this with even a rectangle, I sometimes mark with a rectangle. We're gonna mark from the high to the low, right? We're gonna mark from the high to the low. This is the high, and this is the low. So, boom, bow. Perfect example. As you can see, look how many times price came into this rectangle or institutional candle, and it's been respecting it. If it wanted to disrespect, it would shoot right through it. It would trade lower. It would trade through it, and therefore it would be an invalid institutional candle, and you don't have to think about it anymore because price does not want to respect it. But as you can see, price respected it 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Price came into this area 9 times before then going absolute bananas. You know what I mean? So it's really good to understand, like, this was a candle that was really respected, and you could have possibly got into some entries knowing that while you're currently trading, because all you need to know is what it's doing in the moment, because that's when you actually press the buy or sell button. So you just need to know what it's doing in the moment, you know. Let's find another one. I see a few. Like I said, it's just everywhere, so you'll be able to see a lot. This is not one because look at, yeah, this is the last red candle before the push up, but look at this wick right here. Maybe on a different time frame, this area might have a little institutional candle, but on the weekly, this is not an institutional candle. This wick is way lower and just does not fit the criteria and description for an institutional candle. This, on the other hand, does. This red candle before the large push up, as you can see, nice formation. I mark it from high to low, boom. But as you can see, price almost came down to this area, almost hit. It didn't quite hit. If we really zoom in, wait, hold on now. Yeah, it still didn't hit. The wick almost wicked. I remember I think I was in here. I was like, dang, it didn't even hit for real. But as you can see, it still had its, you know, once, and it pushed up, right? But I see something down here. This red candle right here before this whole large push up. This red candle, this institutional candle made this whole push up. But let's see real quick, because I already see these wicks down here, and that's past the 50%. So if I mark this institutional candle from the high to low, as you can see, price did indeed respect this candle, but it did trade pretty low, right? It traded pretty low, but as you can see, it did end up respecting it and not trading through it, right? And also on a lower time frame, there's probably other institutional candles that it respected that made it even go down to this far. So that's one thing to consider as well. So yeah, let's keep on looking. Look, there's one right here, one right here. I don't see any right here. Oh, one right here. This last red candle before the large push up. Candle formation looks good. Boom. This is another institutional candle right here. Right. Oh, this was one right here too. This last red candle before the large push up. And if we mark this, we can even see price indeed came into it 4 times here, respected it, made it push all the way up here, right? And then came back down right here into this area. It retested this area again and then gave it another push up. As you can see, respected this institutional candle. It respected it, right? So now let me show you guys a blue candle before the large push down, institutional candle. Like for example, this right here, this last blue candle before this large push down is an institutional candle from the high to the low, right? So boom, boom. So as you can see, price came into this 1, 2, 3, 4 times, right? And I mean, price came into this area right as soon as it finished making this institutional candle. It made this blue candle, made this long red candle, boom, traded back up, retested it, and you know, had a little bunchy. This was weeks, so this is literally a month. But as you can see, the last 2 times that price came to retest it, boom, then it plummeted. It literally plummeted down, right? So yeah, this is a institutional candle, a weekly institutional candle, right? Let's see another. And you see now I'm more looking at the top of the mountains type of thing. I'm not looking at the bottom half. I'm more looking at the bullish before the bearish move. So kind of see something. Yeah, I see something. This last blue candle before the large push down, right? If we mark it with a gun box, right? Weekly institutional candle right here. Large push down, and then price came into this and didn't even hit the 50%, so it respected it. So every time it came to this area, it gave a little push down, came back into it, right? Push down, almost came back into it, push down, right? So this is a very valid institutional candle. That of course in the future it got disrespected, but you have to realize we're only thinking about in this moment the institutional candle right here is for this area, right? This is a lot of price. This is a lot of data. This is a lot of time. Let's get our info line and start from the beginning candle all the way to more like when it stopped, like making lower lows and then started to trade higher than this area and disrespect. It's around, this is over a year. Let's go back. This is 245 days. This is a whole year. So as you can see right here, 371D. That's 371 days. So this is a whole year of gold just, you know, selling. You know what I mean? But until, let's delete this. Until price, if we drag it over, until later on, price did indeed trade through it, right? Disrespected it. It literally just traded right through it. So yeah, price went all the way through the 50%, dang near traded higher than it, you know, until coming down. And then later on we see it traded above it. But even in my head, I'm not thinking this is a valid institutional candle around this area, you know, because I'm seeing how high it's trading past it and stuff, and that's not respecting it. So yeah, my biggest advice would be going into your own chart and finding exactly what I'm showing you, right? And you'll see there's a lot of them, and stay on the higher time frame so you can get the hang of how they look and how they're supposed to look. For example, this blue candle is higher than this red candle, right? As you can see, this blue candle is not higher than this red candle in very short term, simple terms. This blue candle's wick is not even higher than this red candle, so I'm not even thinking of this being an institutional candle. And you see, I kind of do it very quick and seamless. It's because I got my reps in and stuff, and it starts to look like ABCs, you know, once you realize like how they're supposed to look and stuff like that. So yeah, that is the institutional candles right there. So number 3 is time session, right? So the fact that you now have areas of interest, aka institutional candles. Other people call it order block, right? So in the trading world, in the investing trading world, there's a lot of different terms that mean the same thing. So an institutional candle is the same as an order block, right? So now that you have an institutional candle slash order block and awareness of it, and you also know how to identify structure. So now if you put the third thing together, which is trading at the right time, especially if you're trading Forex, foreign currencies. So there's the currencies in different worlds. There's a different time that the currency is going crazier. In other words, you feel what I'm saying? So, for example, this indicator that I'm about to show you, the one and only indicator that I use, is called kill zones. It's amazing for spotlighting when a time session is happening. So I'm gonna show it. It looks like this. So if we go to the lower time frame, right, I'm gonna show you exactly what this time session is going to do. So say you have mornings free, right? I'm gonna give alternatives for people that have mornings free and they don't work in the morning, right? And they have their time free in the morning, like 8 a.m. The white background is 8 a.m. So as you can see, every time there's a white little like slit, little vertical line, that's 8 o'clock a.m. As you can see on the bottom here, if I move this, if we hover over this, look straightly like down, like here. Look over here. You see 9 o'clock right here, but on this white, it's 8 o'clock, right? So let's just give you guys a little perspective. And all you do to get this indicator is go to indicators right here. I have it favorited. It's called Kill Zones right here. It's by Oscar VS. 3K people, I guess, use it. It's the only one I use, right? So as you can see, once this 8 o'clock hit, New York session open, look at this crazy move, right? Oh my God, I just actually came up big off of this this environment, right? Okay, look, another 8 o'clock, right, session. Look how crazy it went, right? Right? And you can also see too, if we come over here, sometimes it doesn't look good, right? 8 o'clock, a little bit mushy together, consolidation type of things. As you can see, there's different environments that it's not butched up together and stuff like that, right? It's more showing exactly the direction. Like later here, it showed the direction, but not during 8 o'clock a.m. So maybe you didn't trade that day, right? Same with the day before that. And the day before that too. Actually, no, look, all you need is one good trade, following your risk to reward and all you need is one good trade in the sessions and you're good. So you don't need to be on the chart for mad long, right? So 8 o'clock hit right here and you can see a nice push down. And I'm talking about right here, right? So this area right here is all you need for a day, right? It does not, the myth of you have to be on the chart staring at it for 24 hours and mad long. No, you don't. You just need to know what you're looking for, execute, and secure. You need to secure your profits. You need to close your trades, you know, and walk away knowing that, okay, I just made a goal of mine. Let me do that again tomorrow. It's about consistency. You know, hitting the same number over and over and over until you scale up your account size and can trade higher. You know what I mean? But you want to get the same process of going through the chart, having your rules, executing your rules, and doing the same thing the next day. Simple as that. So 8 o'clock this session, you would have definitely been able to catch something here, right? The day before that, as you can see, 8 o'clock a.m. A little push down here. I mean, but let's see the measurement tool. That's 245 pips to the downside. So that's some moves. You know, that's definitely a potential. But as you can see, later on, it started to get a little bunched up. And then later, like 1:45 p.m., 1:30 p.m. area, then it started to go more down, right? So you might have had to chill out and understand that it's not the best environment right now to trade until, you know, later it started to free up again. But as you can see, 8 o'clock a.m. hits. Oh my God, crazy buys, right? Immediately, crazy buys, right? Same with this. As soon as the 8 o'clock hits, it gave a little, you know, sell down, until boom, this whole large push up, right? Same with this, we can keep on going. 8 o'clock hits, 15, 30 minutes later, boom, price started going insanely down, right? Up. Again, 8 o'clock a.m. hits, price went crazy. You can take advantage of these opportunities when you're inside of it, when the market is open. This is a lot of opportunities to make money, and etc. So you understand 8 a.m. right, and the other thing is 6 p.m. So that's down here. That's 18 right here. So it's the gray. It's the little gray right here before this large red one, right? As you can see right here, 6 p.m. So say you have a 9 to 5, right, and you get home at 6, or get home just you can't trade during 8 o'clock, but 6 o'clock is a time where you could trade. Well, look at 6 o'clock. Look what happened. Boom, crazy push, right? Let's find another, right? This little gray area, right? How do I know? I mean, you could also just go look down here. You can see 18. It's in military time, so 6 p.m. is 6 hours after 12, so it's 18. So as soon as this, 6 p.m. hit, boom, nice little price action down. That's all you need. You don't need to be staying for all the rest of the stuff. That's when you're like sleeping, walked away from the chart, spending time with family. All you need is 30 to an hour, maybe hour and a half, 2 hours if nothing is showing. But even if the chart is not showing you, anything, you can walk away. You know what I mean? So let's go again. Let's find some areas. Right here, not too crazy, so you don't need to trade, look at right here at 6 o'clock p.m. price just right? It's like a continuation of what it did in the morning, right? Let's go to the next. Right here, took a little bit of time. I mean, there is some buys right up here, but it's not as clear as what we've seen before, right? So be careful in this area. The whole point of me showing you this time session is that if you align your time with Forex pairs, you will have a better opportunity and a better chance to find good moves. Not 100% of the time it's going to just have the most flawless, crazy moves down or up, but it will give you a higher chance to understand that, okay, it does frequently have great moves during these times. So let me align my time, my real life habit and schedule to these two times, either 8 a.m. or 6 p.m. You know what I mean? So yeah, you guys can look at more of the time sessions and see how they align and how the chart really moves crazy during these times. So yeah, those are 3 concepts that you need to know about, and you can already make money from these concepts. You know what I mean? You can make money from these concepts. And lastly but not least, the psychology in trading. Number 1, there's no such thing as a loss. So I've learned this very early, and once I learned this or realized this or adapted this, I was already profitable. You know what I mean? Because you really can't be profitable if you. The only way you can't be profitable is if you give up, right? And that's one of the biggest things in trading is people doubt themselves, they give up, they get discouraged, they're sad, etc. Right? But if you understand that there's no such thing as a loss, and it's only a lesson, right? That's I'm never giving up. I'm always gonna learn. I'm gonna continue to grow type of mindset, right? So, number 1, there's no such thing as a loss. It's just a lesson. Number 2, once you get past the learning phase, which you're always gonna learn, but there's a point where you're a beginner, you don't even know what to do, you haven't even put in real trades, live trades, you've only been on the demo account, stuff like that. But once you get your foundation, your strategy, and you start to, get your repetition and confidence up, well, then on the other side of that is the easiest money that you ever will see. And honestly, all you need to do is fill like a couple profits, live profits, and maybe go to the bank, withdraw it, or just use the actual profits that you have made, and you'll just never be the same because you have a glimpse of wait, this is real money that I can make. I can pay my bills. I can spend on stuff. I can live off of. And it just helps you realize that this is not a fake like dream. This is so real. It makes me at least continue to want to grind and continue to be disciplined and honor trading because of how easy it is to make money. I've gotten past the hardest part, which is not even knowing anything, right? Luckily I had a mentor and I mentor people now, so now I do the same thing. It's a full circle moment. But I got past that, so now I'm seeing the fruits of the labor. But I'm not saying it's just easy now that I'm done with the beginning stages. No, it's always a battle and a journey, and always learning yourself and making sure you don't do nothing stupid and be greedy and stuff like that. But I have made thousands of dollars in less than 20 minutes and 10 minutes and stuff that you can never unsee and unfeel. So just knowing that keeps you, like I said, very confident and very hopeful for the future. At least me. Number 3, the market does not owe you anything. What I mean by that is the market is a bunch of big time players, big time corporations and institutions that have the most money, that move the market the way they want to. So they're just doing their thing. We're just little bitty fish, trying to get our little pieces of pie, right? But most people go into the chart, or most people go into trading with no type of like daily goal or certain type of, I'm going to go to the chart to make this amount of money, right? So they're all over the place. They're very emotional, and there's a bunch of emotions in trading. And for example, the moment that you expect to win, you lose discipline. Every single trade, you're starting brand new. Like, it's a new journey. It's a new kind of like ID. It's a new like lifeline. Like, every trade can go a different way, and when you expect to win before you even put a trade in, or as soon as you put a trade in, you're just losing discipline. You're not staying with the same stoic moral values of like being a robot, following your rules. So the market does not owe anything to you, and you need to go in with a mindset of, okay, I'm going to take what the market gives me, and I'm just going to capitalize on my strategy. You have to make sure your strategies works. That's the number one thing. You have to make sure your strategy works, which I teach a strategy. I just taught it, but this is just a little snippet of it, right? But it does not owe you anything, so you have to come in with a very honoring the skill of trading mindset, which is follow your rules, don't get greedy and overtrade and emotional, things like that, and have a daily goal. So come in here knowing that, okay, I made my money for the day, let me get out. Otherwise, you're just going to be very emotional, and there's a lot of different routes and outcomes that trading can take you if you're emotional. Number 4 is one good trade doesn't mean you're a genius. So some people, their ego and their confidence goes crazy from one good trade, and it doesn't mean your account's going to grow because of one good trade. Judge yourself over like 50 trades and see how you're doing, your confidence, your discipline, and etc. versus one good candle. Because you can make a lot of money from one candle, right? But that doesn't mean you got it, so test yourself over a span of a month, 2 months, see how good you are for real before you get your, confidence too high, because like I said, trading will humble you if you don't stick to your consistency and your rules. Number 5, protecting capital is a winning mindset. So you don't make money by just winning trades. You make money by staying in the game. So as long as you have money, aka protecting your capital, you're able to trade, you're able to print money from thin air, right? So it's a long-term game, because you want to live off of trading, not just have trading pay for one thing and then now you like lost your account because you've been stupid. No, like protecting your capital in the long game is way better and way more beneficial in the long run. Number 6, emotional trades feel urgent, disciplined trades feel boring. So when you're all emotional and things like that, you're rushing, it feels like, oh shoot, like a thrill. You're probably breaking your rules. You're probably risking too much of your money, etc. But when you're disciplined, you're trading 1 to 3% of your account, maybe even less, right? The numbers aren't super crazy, especially compared to how much you have in your account. So it's not like you're trading 50% of your account. So that's why you're like really like emotional and like, oh my God, what's gonna happen? Like when you're disciplined and follow your rules and have maybe a proper risk, and you know exactly where your stop loss is and your take profits, it could feel boring. You know what I mean? Could. The boring is what you want. Boring keeps you sane. Boring keeps you in the long run. So go for more disciplined trades and try to avoid the emotional trading because, yeah, like that's just a headache. That's just a lot of energy that you're going to use. And this is money. This is real life money. And some people never come out of, a hole of like, oh, I'm depressed. I lost a lot of money. Or, oh, I have to literally go get a job now because I lost a lot of my savings. I'm victim to that. But everything happens for a reason, and I'm so grateful for it. Way more discipline. You got to go through those, hard headed. You sometimes, you get hard headed, but like I said, the market will humble you, and everybody gets humbled in a different way, and everybody gets humbled in a different way. So either learn the hard way or the harder way. Number 7, consistency comes from identity, not motivation. So don't just be motivated to be consistent. Make consistency a part of your real life. You know what I mean? Like you're trying to be the trader that you're trying to be in the future, a full-time trader. And what would a full-time trader do? A full-time trader is not just going to be motivated to be a full-time trader and like act like a full-time trader. A full-time trader is a real full-time trader because they're consistent, they're disciplined. Even on the bad days, on the red days, they're still being consistent with, okay, I only take 2 trades a day. You know what I mean? I'm still hitting my goal of like, okay, daily loss. You know what I mean? And I'm not going to overtrade. Stuff like that. You want to be consistent, and that needs to be from your identity. So that needs to be all the time and not just from slight motivation. You've seen like a TikTok or like an Instagram reel. You don't want to get motivated. I mean, you can get motivated, but use that motivation to form it into your identity and not just like a little spurt of, oh, I'm about to do good for a little bit. No. Keep that same mentality for the whole journey. Easier said than done, but still, keep it up. Try. Number 8, you don't need more trades. You need better patience. So you don't need to keep on trading and over trading. You need to wait for your setup and wait for a high probability setup, which is basically the trade is like, oh yeah, this is meeting all the rules. It's clearly showing that it's buying or selling, and it's an A+ setup. And then you capitalize on a A+ setup, which has a lot more money to it. Maybe you don't trade for a day or two because you're waiting for an A+ setup, but that's what you need is better patience for higher probability setups. You don't need to keep on trading and have like 100 trades a day because that's 100 other times that you could lose too. So definitely take that into consideration. Number 9, green days don't define you and red days train you. It's not the profit days, the good days that make you. It's the bad days. It's just like a relationship. You're not going to talk about the good. You can touch on it, you know what I mean? But the red days or the not so good days is where you're learning how to get better, learning how to, get better simply. Like the red days when you're not doing as good is what's going to really test your ability to bounce back, to stay disciplined, to, when things are good, they're good. You don't really talk too much about it. You're living in the good. But when things are more bad, now it's time to reflect and do some learning. You know what I mean? So definitely understand. Don't get too hype and your head is inflated because you're making some money. You know what I mean? Like let the red days make you into the trader that you're trying to be. And lastly, number 10, your rules matter more after a loss than after a win. You know why? Simply like number 9. After you win, it's like, okay, you won. I mean, you do need to, walk away. That's the one thing that does matter. You need to walk away because it's not about just making the money. It's about keeping the money. So make your profit, your daily goal, get away, come back tomorrow. That's what I do, right? But your rules definitely matter way more when you lose because there's a thing called revenge trading. It's like, okay, if you lost, then it's like, I need to get that back. You know what I mean? And that's when you're in maybe like a 2 losing streak or whatever. That's when you need to, okay, step away, get your mind right, come back the next day. But a lot of people just disregard their rules when they lose, because it's like they want to get it back, they want to get that money back, they don't like how it feels, etc. Don't let them have risk way more than they wanted. So maybe they wanted their rule is 2%, right? And they lost 37% of their account. Oh, that's gonna hurt, sting, and they're gonna want to get that back. So it definitely matters more to keep your rules in place when you're losing versus when you're winning. But yeah, that is 10 psychology tips. I could keep on going, right? Trading is way more psychology than the actual strategy. Once you get the strategy, you just keep on doing the strategy. But in the process, you're going to get better at being a full-time trader and a successful trader and an independent trader. So I hope this video helps. Comment and let me know how you guys feeling about the content. All 2026, I'm just flooding content. I took little breaks and stuff like that. Time to get myself my real life and checked and aligned. But now I'm just coming with a lot of content. My ups and downs need to be broadcast. I'm definitely I have a high standard and only want the high standard or the better moments to be captivated. I gotta stop that. I'm not gonna lie, I gotta stop that. So the ups and downs, everything you can learn from, and yeah. So make sure you subscribe, keep the notifications on, and until the next video.